What's up, traders? I just got back from vacation, so let me get up to speed with you all and what happened over the last week. The first thing we're going to start to talk about is Bitcoin or cryptocurrency as a whole. I made a quick post as someone pointed out to me this week that Bitcoin has finally achieved what many have been waiting for. I've been watching for the last 2 months, I would say. And that is a confirmed bullish breakout. Of course, when I'm trying to figure the sentiment of a particular instrument, I look at the daily chart on Ichimoku. And right now, price has gotten out of the cloud on the bullish side of the cloud on the daily. At the same time, that momentum, the Chikou, the lagging span, whatever you want to call it, has gotten out at the same time. This is the first time it's happened since November of last year when price got back into the cloud on the bearish side and then started a bearish trend based on Ichimoku analysis. Now it's gotten back above it. It is bullish. But to what point? Well, that's what a lot of people want to know, of course. Well, if we go up one more time frame higher to the weekly, we can see that Bitcoin is still a bit neutral. It's riding the cloud. In fact, the support that we've been watching for all this many months really comes from the halfway point, the 50% retracement of the major move from the COVID low back up to the all time high, around 36K. That's where it came down to, held, and consolidated. Now it's breaking to the upside. Well, I'm going to use the same methodology to figure out the first target, and that is going to be the 50% retracement from the all time high down to the low that it made in January of this year. And that also happens to be part of the reason why I use it, the Kijinsen, the 26 period 50% level, which we're going to call that 51K. And so if we clean things up a little bit, go ahead and take Ichimoku off, we can see that the first target is going to be 51K. And that also matches up with some inflection back here that we had in December. And so this is going to be the level that I'm going to be looking at on Bitcoin for resistance. It's pretty clear, and you got to see what happens there. From here to there is basically your reward on this breakout as it stands. Now, I talked about this breakout as it was happening because it really started back on March the 15th. There was a post that I made, I believe someone commented on it today. There was a weird volatility quake that happened on the 15th. It happened in every single cryptocurrency. It was around 11 o'clock, 10 o'clock p.m. Eastern time on the 15th. Very weird. Every exchange, every cryptocurrency. And then when Bitcoin finally broke this high, that was when this bullish trend, this bullish breakout really kicked off in earnest. And so that's what I've been looking at all these last few days, basically all these last few months for Bitcoin and cryptocurrencies to break out of their consolidation. A wedge if some wants to draw there. Yes, that could be a wedge. And now it is breaking up to the upside, and 51 is going to be the target. Ethereum doing much the same thing. It is also, let's go back and take a look at that because that was just so interesting. Every single cryptocurrency, Ethereum, Solana, Monero, Ethereum Classic, Litecoin, everything on every exchange I could look at had this same quake, and that really set up a trigger. If you were basically this bar with a breakout of this right here, that was what triggered this real move. I mean, this could have been fake. Normally, I would look at this as a short setup, but instead it trended up, triggered the breakout, and that is what has really kicked off this trend. So that's why I look for these volatility spikes. That's why I do the majority of my trading based on them, is because they give you a clear line in the sand. Normally, they are reverse, but if they break that wick that they create right here, that is a true breakout. And that can be the defining moment for any trend to change. So Ethereum, once again, if we take a look at where it could potentially stop out at or find resistance, it's going to be the halfway point of the move down that we've been under for the last several months, and that's going to be 3,500. So Bitcoin 51K, Ethereum 3,500. One that a friend of mine really wants me to keep an eye on is Solano. Solano, it has been actually holding the bottom of this range. I have been comfortable with people going ahead and buying Solano, understanding that their stop needs to be at about 72. Well, it never breached that stop, and now it too is trending and hasn't really broken the highs of the last few months. But you notice cryptocurrency tends to trend together. Dow theory, which was written about stocks, how instruments in the same industry tend to trend together. Well, it works in cryptocurrency too. That being said, let's take a look at the Bitcoin dominance chart. So the Bitcoin dominance chart is still moving upwards, but it has definitely slowed off. Now, why do I look at the Bitcoin dominance chart? I look at it to understand if we're going to have an alt season. And if you've been watching, let's say, the Ethereum Bitcoin cross pair or any other cross pair against Bitcoin, you may have noticed that they have begun to trend upward. In other words, let me clean things up just a little bit. One second. They've been trending upwards, meaning that Ethereum has actually been outperforming Bitcoin in this recent run up. And that's going to be the case with a lot of altcoins, I'm sure. And we can see that just by looking at the Bitcoin dominance chart, because this is the relative Bitcoin market cap to the entire cryptocurrency space. So as this rally has happened, it's become a risk on environment. And the more risky, the more volatile cryptocurrencies are benefiting from this run. Now, that is all happening in tandem with, of course, the US stock market. And I think that's the real story here. Well, the story here is risk on. I've been talking about how this move down from January 4th until February the 24th was a correction. I know a lot of contrarians want to say that no, the market is actually going to crash. We're actually going into a recession, blah, blah, blah. And they'll point to various figures and statistics to tell you that. It's funny because I think that the contrarian narrative is that no, actually, this was just a statistical correction. And I've seen multiple pieces of evidence that no one else really seems to look at that's a lot more useful than the news, one of which is the VIX. We'll look at that in just a second. That basically indicated that the February 24th low, the spike down that we had on the Russia invasion of Ukraine, was the bottom of the market for probably this quarter. Well, definitely this quarter now, as it's going to end in a few days, maybe even for the next quarter. I didn't say year because we need to see what happens there. The reason for that is because this year reminds me a lot of 2018. Talk about that in just a second. The key thing that happened last week was we had 6 days, 6 big bullish days, which I thought at some point it was going to turn around. In fact, on Monday of this week, even though I was away on vacation, I actually tried to get a little short setup in right here. This was Monday at the open, the March 21st, which, yes, that was Monday. I tried to take this short right here. I did because, again, it's one of those volatility spikes that happen right at the open. This right here is a good trade. It is a good trade. And we can look at it in the future and say, well, it didn't work, so it's not a good trade. No, it's a good trade because it fit all the rules. And I was able to actually close it out at about break even, close to the close. I didn't want to keep it because I'm on vacation, didn't want to worry about it. So I saved myself taking the stop. But the reason I took this trade on S&P futures was because it was a test. It was right here at the 50% of the entire correction, 44.54. It was right there on Monday. So if that trade had worked, if it would have gone down, if that bearish trade would have worked, then that would have confirmed for me that we had a resistance. And yes, this may have been just a dead cat bounce, a bear market rally, what a lot of the contrarians want to say it is. But no, the next day, we'll just look at it on the daily here. The next day, just by bar closes, Tuesday, we had a big close up, big up day. Wednesday, down, closed to confirm this same level, not as a resistance this time, but as support. And then on the 24th, which I believe was Thursday, yes, lifted off of it. It took this resistance, which you can see. Well, let's just look at this. Look at this right here. This 50% is drawn from the all-time high back here on January the 4th down to the 24th low. And you can see how price rallied up to it, hesitated on that Monday, shot above it, tested it, and rose off of it. Resistance became support to go up. And so I'm going to continue with my thesis that I'll say it now. We're going to make a new all-time high. Probably sometime in the late summer, but don't hold me to that. I don't know what this market's going to do, but I do believe that we're going to come back from this correction. You know why? Because we get one every other year. Only 15% of corrections turn into full crashes. Statistically speaking, that is the most likely scenario. I know that everyone's concerned about inflation. I know everyone's concerned about the Fed. I know everyone's concerned about Martians landing on Earth. But that doesn't mean the market is going to go down. The market can remain irrational longer than you can remain solvent. So I'm going to keep working on that theory. And of course, just to reiterate, I keep on pointing this out. I hope people are listening. Don't watch the news. Watch the VIX. The VIX told us that was going to happen. Here is the January the 24th dip in the market. And then the February the 24th dip in the market was lower on the VIX. There was less fear. This divergence told you everything you needed to know about this stock market correction. The highs, the fear spikes were going lower, even if the market was making newer lows. This was more of an indicator of what the market was truly doing, what the market was truly pricing in, than the indexes or individual stocks themselves. It is a super powerful tool. Turn off your news, bring up VIX, and just watch. Study it. Or just read my posts and videos, and I'll keep you posted on it. So let's talk one more time about gold and silver, and take a look at commodities and wrap things up. So a lot of people were trying to get into the gold trade as a breakout. I cautioned against it. It's not dead, but it is definitely not breaking to a new all-time high. The trade that I'm in right now, precious metals wise, is actually silver. And that is much to the chagrin of many of my friends that love to send me DMs every time silver and gold make a meaningful movement. They just love it for some reason. It's holding this level here, which again is a 50% retracement from the high to the low down here. And it came down over the last few weeks and has so far held it. I would like for this thing to be faster, but I'm still in it. I'm still holding it bullish. Oil. Oil's been another one of those beautiful 50% stories. From the low it made in December down to up to the high that it made at the March the 7th, it pulled back to 96, the 50% retracement of this move. And then to do another 50%, it came up to 112, basically the upside 50%. And this is the level to beat. Now it's sort of hanging out trying to make a decision. This is key. Where oil goes from here is going to be very meaningful. It could come up to retest the high, or this could be the point that it holds to fall off. I'm actually going to be on the bearish side of this. I think that this was a little overblown. I think that at $100 a barrel, it was a trading price range that I recall very vividly from my early days of trading. That price liked to hang around with from the 110 to 80. This was where, when I first started trading back in 2011, 12, 13, 14, it held. This is where a lot of producers, especially U.S. shale producers, begin to get profitable. And so they're going to turn online and they're going to start producing because it makes them money. And so we're going to have supply come into the market and sort of resolve this bit of volatility that we ran into. But technically speaking, 112 is the resistance, And what we can do is we can dig down here. I'm going to be watching this week to see if we can get some sort of a bearish trade in here to, again, test it, test out to see if this is actually going to go back down. And if it does hold this 50% retracement, I do expect on the next retest of 96 to break below it, probably get down to about 80. We'll see what happens. Big story from this week. Look at individual stocks to clean things up. NVIDIA, which I've white knuckled diamond hands it through all this mess. It has finally started to show some life. I think I had a 10% day last week. So tech is back. Tesla is back above this. It had a major resistance of 900, which it stopped at on March the 18th. I think that was Friday of last week. Well, this has been confirmation. Tesla is back into a range. I don't want to buy it yet. Tesla to me is still a bit of a meme stock. I want to own Tesla, but I'm going to wait. I'm going to wait to get into it because it really needs to shake some people out. I hate to say it, but what I would like to see is a pullback to retest the 900 again and then maybe try to get an entry there. That would be a really good setup for me to look at because that has been a major level, a point of inflection throughout this whole last 2 years. And so 900 is something that I'm hoping we'll get to see again, but it is trending up. So it could come up to retest that high again. Google has finally got me in my trade back above the entry point. I actually added some on the February the 24th dip as well. This is one of my highest conviction trades of the year because of the split, and which is in July, if I recall correctly. So I really expected to rally till then. If you don't own some Google, look around you to how many people have Google phones. I'm broadcasting this on a Google product right now. It's kind of the no-brainer of the last decade. It's outperformed the S&P. Again, highest conviction trade of the year. The hashtag, this is not financial advice, but seriously, come on. Just listen. Amazon. Amazon gave me a fantastic opportunity to get in after the split announcement. It is another high conviction trade. If you don't own Amazon, what are you doing? Seriously, how much stuff do you buy off Amazon? And they've got a split coming up in May. The reason I'm so bullish on these is because the splits of the last few years in Tesla, Apple, and NVIDIA have all created pre-split rallies. Then at the split, they fell off a little bit, and we can also play that. But up into the split, and again, Amazon split is in May. We've got plenty of time. I do expect a rally. We're gonna look. I think we're gonna look back on this. I was like, oh wow, that was a pretty obvious trade, and that's why I'm telling people now to be watching for it. But I'll wrap up by saying this: as now this rally is kind of really in full swing, and people are starting to accept it. It may be that the best opportunities of the year, at least the cheapest prices of the year, were at the beginning of March when everyone was nervous, everyone was concerned about World War III, everyone was concerned about whatever they're concerned about. They're always going to have new fear to sell you. You needed to be watching the VIX. You needed to take your stuff out of the news cycle, and you needed to look for opportunity. You have to. Every year you have to look for opportunity. The market's not going to go down without some story the media is going to say. They have to publish something to keep you interested. You just can't take it to heart. You have to look at it from a technical perspective. Where do I want to buy this? Where is there a volatility spike that presents an opportunity? And you have to take it. That's all there is to it. I will constantly be trading for the rest of the year, but I'm fully expecting that the best trades were back at the beginning of March, right around the time of the Ukraine invasion, when fear was, well, wasn't the highest, was it? But fear was elevated and people thought that this was the end of the world. And you know what? If it is the end of the world, you should probably buy stocks because if it is the end of the world, you don't need the money. And if it isn't, you'll probably make some money. That's it for this week. I'll be back on Discord every day. Join me there and trade wisely. We'll see you next video.